Hey traders, this is Ron Haidt at Market Tamer. Happy Tuesday. Hope you had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Diamond ETF. The majors today had a pretty good up day. The Dow was up 1.73% via the DIA, but if I zoom in closer, we closed a little bit above the 5-day EMA, but where was the volume? If this was going to be a bottoming type candle, you would expect maybe some bullish engulfing where we completely engulf the previous day, and then just surge, close the highs of the day, and a big volume spike. We did not have a big volume spike. It was just so-so. And yeah, we're above the 5-day. That means the 5-day outlook is bullish, but I really want to see what happens at the 20-day. This was not a confidence building low just yet. We take a look at the SPY, which I have a bullish position in. Zoom in a little closer. The SPY closed at 267.77. 5-day finished at what? 267.64, 13 cents above the 5-day EMA in blue. That's not exactly inspiring if you're a bull. Volume didn't really take out some of the previous red days. There wasn't a lot of progress today. So again, caution still warranted here. If we take a look at the Qs, they were up 1.65%. Their volume did spike. Just bring this down a little bit. But they did not get above the 5-day EMA. Yeah, they closed at the highs of the day on a little bit of jump in volume, but no technical turnaround was made whatsoever. The Qs are still bullish, walking in tomorrow, even on a 5-day basis. We look at the IWM, the mid caps, they had a nice pop, 2+%. Their volume fell off though. In fact, the volume is even lower than it was a couple days ago. Yeah, they're above the 5-day. But for those indexes, the DIA, the SPY, and the IWM that are above their 5-day, we would just go right up to the next moving average, which in this case is the 20-day EMA on the IWM, the Russell. If I go to the spiders, the 20-day EMA in red and the 200-day SMA in purple are both coming together at 275. That would be the upside target right now. I'm not overly thrilled the fact that the 5-day is at 0.64 and we're at 0.77 over here. 13 cents is not a lot. I think I would want a little more of an update here just to feel a little more confident that maybe that's the target from a confidence perspective. But if you're a bull, that's as good as you got right now. And you better be hoping for some bigger volume too. The Dow, again, target 20-day EMA in red, I would put as the next major upside target in the near term. The 200-day in purple is just above where it's trading. If we're going to bounce, we should be able to get through that. I'll tell you what, if the Dow can't get through that and it rolls right back over, that is not a good sign. So overall, caution still warranted. 3 of the 4 majors were pointing up, but they did not make huge strides today, just for the record. If we take a look at some ETFs, let's look at the semis. Sometimes they can lead. Now the semis were up 4.25%. That's a pretty big deal. Volume, not exactly amazing, sort of like the rest of the market, but at least it closed at the highs of the day. Target 20-day EMA right now, that's basically 96 bucks. We look at the transports, IYT. They did complete bullish engulfing. Yes, finally one of them, right? Transports are also supposed to be a good sign. 2.83% higher. The volume was pathetic. Now, this isn't something that trades millions or tens of millions of shares, but measured against itself, volume was not that great today. Upside target, you guessed it, 20-day EMA in red. Now, one ETF that did have a really great day is XHB, 5+%. And if you look at the close from the day before, it was 32.18. Today's open was 32.12. That does count as bullish engulfing. Big spike in volume. That's what we want to see if we want to believe, from a confidence perspective, that a bottom might be in. If I zoom out, the spike looks even bigger, right? Upside target 20-day EMA. We get through the 20-day, target 50-day. Then there's going to be a little bit of resistance around 39-ish, and then we go right back up here. If I want to be bullish on XHB, bullish engulfing is one thing I'd look for. Check. Volume spike. Check. But the market still's having some trouble. I mean, this thing was down, what's that, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It was almost 13 days in a row. Then it went down another 5 in a row, and up day 4 down again. This has been taken out to the woodshed since the middle of September. It's really been awful. So if I want to be bullish, I could put a stop at today's intraday low. The stock should stay above there on a closing basis. And if it doesn't, I could consider just bailing again. Upside, you have your targets. We're going to keep this one on the watch list and review it here in the days to come because we actually might get a bounce here. I think the bounce could even be more significant if the market can hold itself together. Now, one stock after market, stock that's reporting earnings after market is Facebook. And I was curious to see if it was going to do a face plant or if it was going to do a rally or what. If I pop open my little window here, Facebook closed at 146.22. As of 7:07 p.m. Eastern, give or take, it's right around 151. So 5 after 7, it's at 151, basically about $5 higher. That's only going to put it right about where my cursor is. So if I zoom in, 151 is there. Right now, it's not even above the 20-day EMA. And I would need that to be the first sign that, hey, if we get through the 20-day, which we couldn't do back here, and really only did here for about a day, might be the sign we get some sort of rally going on here. Apparently, the data was not all that positive for Facebook, according to some of the articles that I read. But, when you get a full day of trading, that can be a difference maker. And then something else that I bet you guys are noticing as well, depending how bullish or bearish the market is on the day the company announces, can have a big impact. It can be the wind at your back or the wind in your face. You could have a bad report, and if it's on a bad day, you get double killed. But if it's a bad report on a good day, you may not trade down as much. So we'll see how tomorrow fares for the market, but right now Facebook isn't really rising that much, considering its latest earnings report. Coke, new all-time highs. Normally when a stock hits new all-time high, breaks outside of its upper Bollinger Band, that would be a little overbought. But considering the stock has essentially gone nowhere from its past earnings report in July, this breakout after that much consolidation with a spike in volume and closing at the highs of the day, that basically initiates a new trend. So Coke here is bullish. Yeah, it's overbought a little bit on the daily, but something like maybe a 20-day EMA in red could be considered a trailing stop. IBM going in the other direction, down 3.54% after there was a full trading day of red hat behind it. Big volume, new lows. I'd have to go out to a 5-year chart and show you the low from early 2016. That ballpark was around 110. We're only $5 away, so about 3-4%, and we're 4% we're going to be there. Looks like where we're headed. If that falls, well, holy Toledo. Then there's more consolidation around 100, and if that falls, then you start going down into the 60s. I'm not saying it's going to get there, but that is one big ugly candle on a monthly basis. There's been talk about their debt being an issue, the desperation to acquire Red Hat. That's fine, they're all opinions, but the trend is down. And even from the earnings report on that gap down, it never got above the 5-day. So if a protective put was used ahead of that earnings report, it would still be in place now. The stock hasn't gotten above the 5-day to signal any short-term bounce. I would still want to keep it there. Now, one thing I might also want to consider, if I believed IBM could stop going down here in the near term, I could take my put that I bought maybe at the money around 145 or 140 and roll it to from what's now deep in the money to maybe at the money, and at least take some capital off the table or profit in that long put option. NVDA, big day today. This thing's been getting crushed. I told you guys this thing's going to be entering a seasonally bullish window. I'm going to watch for the turn. We just might have got our turn today. The only thing I wish there would have been more of was a bigger pop in volume. We did hit 20 million shares. We did not complete bullish engulfing, but we closed right back at the top of that day's range. 9.36%, $17. If this thing is now going to bounce, it needs to hold the intraday low, which is 185.62. That's a pretty big stop. That's where I'd want to see, for me, a stop set at. So upside target 20-day. There's also a little unfilled gap, which does coincide with the 20-day EMA. So I do like the way NVIDIA is acting, but I also want to just get through the election. So that being said, how about this? Let's say I wanted to do a full-size position, whatever that means to me, on NVIDIA. If I really like the opportunity now, maybe I consider a third of a position now or a half a position now, then wait for after the election and then consider maybe the second position to complete a full position. According to reports, it looks like November 9th, that is right after the election. A couple days later would be earnings. I could also just wait for that report as well. How about Under Armour? 27% move. If I bring in all the data on Under Armour, this is going back to 2005. Let me change this to a weekly. I'm going to zoom in. If you remember back in the summer, I talked about watching this high, this last swing high, which was about 23 bucks or so on Under Armour. We started to get above it, but then we drifted lower. We're now putting in a higher low on a weekly basis. So here's the capitulation low, October a year ago, higher low in January, February. Now we're getting a higher low here in October. We take out that $25 area. The next resistance goes right to 30, and then all the way back up to where the decline began, which is mid to upper 30s, 37, 38. So I like Under Armour here from a potential momentum perspective. It really did have a great pop today. Again, near term, this recent high, and then you have your upside technical targets. And here's something else to keep an eye on, which is AOS, something we don't talk about much, AO Smith. This thing had a huge move, and that's what bullish engulfing should look like, which is why I wanted to bring it in today. Huge spike in volume. It's undeniable. That is a towering update bar. We gap lower, closed higher, a little bit of capitulation is my guess. Bullish engulfed, upside target. The main one, right back up here, 57.50, 12 bucks higher, maybe as much as 15 to, I'm sorry, 12 bucks is gonna be almost 30%. 8 bucks is only 52, but that would be the target. Of course, we can go 20-day here, 50-day in red, and then getting here. But if I was short or bearish on AOS right now, this would scare the crap out of me, because if you're a bull, that's exactly what you want to see. Now, ideally, we'd like to see follow through, another close to the upside. But the stop I would consider would be down there. So some different stocks to look at. Keep an eye on some reversals and some that just aren't doing well. Be back with you tomorrow in the video. So wish you guys a great rest of the day and a super week ahead. Take care.